If you hold XRP or have been thinking about buying XRP, then you're going to want to wait until you've watched the entirety of this video, because right now markets feel absolutely cooked. Almost everyone who's invested over the last 3 months has not made any money in the crypto markets. The entire crypto market cap is down, the fear and greed index has hit new local lows, and many people have been asking, is the bottom in for crypto, Bitcoin, XRP, and will a true altcoin season ever happen at all? Now, I do want to state that this is an opinion piece. However, it is pretty factual. Again, the reason it's an opinion is because of the way in which they share information, but it looks like the Democrats have lost in their bout to continue to keep the government shut down so they can get what they want when it comes to healthcare, because 8 senators have sided with Republicans to open the government back up. And I do think this is a positive development for markets. The real question is, are they very similar to the Fed, where they do too little too late? Either way, unbridled anger aimed by other Democrats at the 8 is a sign of the partisan times and more bitterness to come heading into 2026. And I will state that I think 2026 is probably not going to be as good of a market year as we would like, with all of the uncertainty surrounding this continued infighting and partisanship over in DC, especially when we come into the midterms end of 2026, where I do believe the Democrats are probably going to go ahead and take Congress yet again, which will create for situations and environments that will lead to great difficulty in the Trump admin being able to pass many of the laws that they would like to pass. Right now, if they want to get anything done, they're going to have to do it fast. One thing we do have to state about Trump is that 9 times out of 10, he gets what he wants. He was telling the Republicans to fight. I shared that in a prior video. And as for the Republicans, they deserve credit for holding firm against the Democratic demand to extend pandemic-era Obamacare subsidies. And that's really what the whole fight has consistently been about. But who truly knows? There's very little we can trust about Washington and their motives and all of the other little things they slip into these major bills or government shutdowns. But at the end of the day, one thing we do know is that it's going to be healthy for government to reopen and get back to business as usual. While at the same time, the Senate has officially released its bipartisan crypto market structure draft. So unlike the partisanship at all other levels, crypto seems to be a very popular topic for all of these Congress people, where they have experienced a lot of lobbying from the crypto industry. They've been won over, and something has to get done. The question is when. Either way, this is a huge move towards a clear legal framework for Bitcoin and crypto trading in the United States, Ripple being a United States-based company out of San Francisco, consistently growing and large. XRP, the token and backbone behind their business model, stands to do very well considering it was considered not a security. So yes, it would be under CFTC oversight. The question is, will all cryptos be under CFTC oversight, which would be very positive for the entire crypto market, because then they would be looked at more as commodities and not securities. So not under the same level of scrutiny or regulation, cleaner rules, easier exchange access, more institutional capital, and true market structure. This would be massive, and we're hoping that it moves forward soon, as this would mark a major step toward the government delineating from where the CFTC's jurisdiction ends and the SEC's jurisdiction begins. A key question that only Congress can answer as these federal agencies ramp up their efforts to publish guidance for crypto companies and other firms hoping to offer crypto-related services in the United States. In other words, it's kind of like Trump always wanting to deregulate, because we are so regulated that nothing ever actually gets done. And I'm totally in agreement, right? When you study some of the most effective leaders throughout history, nobody ever built a statue to a committee. Someone has to make a decision, and the sooner you make a decision, the more success you will have. Even if you make errors or mistakes along the way, those can be easily corrected, but with committees, nothing ever gets done. So hopefully we don't see too many hurdles moving forward forward, but either way, the odds that the market structure legislation will pass before the end of this calendar year is quickly approaching zero and likely will get done in 2026. Hopefully not closer to those midterms. We're hoping closer to the start of the year, or at least within the first half before the midterms, because otherwise things could get very shaky and the crypto market will yet again be at risk in a hostile environment where in the past, under a Biden administration with Democrats, crypto was consistently attacked. Committees and regulators like Elizabeth Warren, who pressured banks and the Fed to make it difficult for crypto to do business in the United States. So it's unlikely a market structure bill is going to affect the current prices of crypto until we see more action around a legitimate time frame or date. Either way, we should see a bit of bullish price action, or at least I'm hoping so, because Canary Funds has filed its Form 8A, which goes effective at 5:30 p.m. Eastern Time, Wednesday, November 12th, once the NASDAQ certifies the listing. And yes, they have the queue from regulators to certify listings that go through the process over a period of time, and that period of time is up. So when that happens, the last hurdle is cleared, and the very first spot ETF will launch Thursday market open. So we really want to watch what occurs with the inflows into that spot ETF, as Bitcoin ETF was the fastest growing ETF in crypto history, but not just that, BlackRock history, which is quite impressive because BlackRock has a extremely high rate of getting listing approvals, and because they have the world's largest fund manager, can actually back those listings with a lot of their client funds. And just to be clear, we have talked about the RexShares XRP ETF, which was slightly different because it was a partial spot XRP ETF. In other words, there was partial spot exposure. So yes, they would buy XRP for every single share of their ETF you bought, but they also bought or basketed it with other products, and it was less tax efficient. In other words, this would be less incentivizing for major institutional players to enter, whereas the XRP ETF through Canary Funds would be 100% XRP and nothing else. So that's really exciting. And in a typical market environment, even more so. But right now, we are currently trending to the downside. Markets are struggling to maintain their range highs. We're seeing more sell pressure to the downside and increased volume. And even going back to Wednesday, October 29th, we've seen far more outflows on the Bitcoin ETFs than inflows, which leads to more selling from institutional players through many of those funds. The only day we saw inflows was a very weak or small 239 million on November 6th, and since that point in time, we've just seen nothing but outflows. So this can create an environment where the XRP ETF doesn't get enough attention because investors are just a bit weary. Maybe they're tired. Maybe they don't want to carry extra risk right now in a crypto market, where we're seeing the stock market put in an exhaustion gap and dumping for some local lows. Now that would be spot ETFs, and yes, those exchange flows do matter because they do have to buy and hold the spot underlying asset, then withdraw it from an exchange to a custodian like a Coinbase or even Ripple, which now has great custodial services. At the end of the day, supply on exchanges has consistently been dumping for Bitcoin, which will drive demand in the entire crypto market, going all the way back to those bottoms of 2022, 2023, and actually even further back in time. But that said, it looks like we're starting to flatline quite a bit into these all-time highs, or at least according to sentiment, which leads me to believe that people are uncertain and not withdrawing at the same degree. And we've verified that with the spot ETF inflows and outflows.